when Brad was right.
All right, so Christian, we absolutely nailed this FedEx call. Estimated earnings per share were 264. I predicted it at 311. To be fair, I don't remember where you predicted it at, but I said they would crush it anyway, and boy, did they ever. $232.79 is where it was at as of last Stock Watch Sunday, and it climbed as high as 256. Actual earnings were $4.87 per share. This is an absolute stunner, man.
Yeah, I was at 307. I have my numbers here, so I was at 307. We were right around the same thing.
Yeah.
Yeah, nobody could have. It was crazy, those numbers. And it moved appropriately. It was great.
It was a really great mover. It's obviously pulled back down today. As of this recording, this is Friday at the end of the week, so everything's been pulling back down. But FedEx is still an excellent mover. I think that we actually see this move up after this dip here. It might be worth grabbing the dip on and holding on to for a little bit longer. Adobe, we were absolutely right about this one as well. And even we were even right about the reaction after earnings. They came in, estimated earnings per share was 241. I guess at 273, the actual is at 257. I said it would sell off after earnings because the hype was just too real and this thing was too loaded up. The price was baked in. Sure enough, it sold off. And, it may actually be starting to approach a buy level now. But if you guys heeded the warnings and as sold off most of your shares going into Adobe earnings, I think that you're probably for the better. Where'd you end up guessing this one at, Christian?
Yeah, let's just pump the brakes for a second. What'd you say those earnings were? What was the actual?
Actual is 257.
I said they would beat 259.
Oh, that's right. 259.
Get some. Yeah, we did predict that. And one thing I actually found out today, so I want to clarify because my position's changed a little bit now that you mentioned buy levels. We love this as a business, and I expressed some concerns regarding their model and their ability to grow. And I was always reviewing their earnings calls. One thing I didn't consider that they mentioned in their call was Q4 is historically a slower quarter for them.
Yeah.
They expect an increased demand just based on small businesses and education. And I didn't even think about the education piece of that.
Yeah.
So I may revise a bit, and this makes it, obviously it didn't change what we thought, 15 to 20% increases across the board, which was great, but we knew that wasn't going to move the stock. But I think this makes a great case to invest in it going the next quarter, and they'll probably beat again.
Yeah. I think this is definitely a clear buy now that it sold off pretty significantly. It sold off because the price was baked into earnings, and then it sold off because of the rest of the market. The NASDAQ right now is down a ton. My overall account, as you guys saw there, is actually down today as well. I ended up adding to a bunch of stuff, and we'll get into that for Stock Watch Sunday. But Adobe, I think, is starting to approach buy levels here after it's finally sold off. Still like the stock, but we knew that was what was going to happen happened. That is, last one where I was right, where we were right. I said it was Gilead. We said this would be a great day trade on Monday with the acquisition of Immunomedics, and we were right about this. Went all the way up to $67, which is where we said the resistance probably will be met with this one, and it was a great day trade. We also said that probably wouldn't be worth holding on to the rest of the week and just try to make it a play for Monday. We look at the chart here. It climbed all the way from $63 all the way up to almost $68 a share right out of the gate. Would have been a nice quick in and out. And then as we predicted, it ended up fizzling out the rest of the week. Gilead isn't the great company, isn't like a great company. And it kind of falls in the same lines of all the biopharma ones. It's super volatile. It's not really all that great to, I would say, invest in, but it was a really nice pop nevertheless. And Immunomedics did exactly what we thought too. It just went all the way up to around $88 and didn't go up any higher than that as well.
Yeah, and that's all you. I can't take credit for that. You're right. You actually said you wouldn't look to get in that first resistance, and you predicted that it wouldn't even break 70. And that would be where you would consider it. So it was almost to a T. So kudos to you.
Yeah, appreciate it.
Glad I was right again.
All right. Here we go.
When Brad was wrong.
So Snapchat, I struggled with this one saying that I was wrong on it, but if we look at the chart, I mean, I wanted to get this up over $25 a share, and I wanted to say that it did technically, but it really only blipped up over $25 a share. So I would really want to see this sustain a break up above 25. I thought that would happen this week because of all the TikTok debacle and all that craziness that's going on. It is now definitely at a buy level right now where I'm seeing it here at 23.50. But this one didn't get as much traction as we thought it would. It did end up moving up some, but it was a slow mover and kind of boring all week, to be honest with you. Very choppy. And it just, like I said, just cracked up over $25 a share about 3 times this past week and just really couldn't sustain anything above that. That's going to be the next crucial area for Snapchat. I still consider this a buy. I still like it, especially down here at 23.50. But got to admit where we were wrong on some things. And this was one that we kind of missed the mark on.
Yeah, and especially today, there's a sell-off, but that's everything. So I attribute it to the overall market. I will say though, what gives me hope is that in the past, Snap has like tumbled, and it's held up quite nicely as everything else is dropping off. So that gives me hope and still feels confident about the stock.
Yeah, I mean, I like I said too, I still like Snapchat a lot. I actually ended up selling out of it today because of the huge drop off, and I wanted to be able to lock in some of the profit that I'd already made on it, and not just sit there and watch the red go. So sold out of a lot of stuff today. Ended up getting pretty liquid, but yeah, Snapchat's still very much a clear buy, and you can see I have a couple areas of support marked for this one, and you can see it very clearly bounced right off of that today at 23.20. So really good buy levels for this one right now, I think, in my opinion, and really all of tech stocks. And speaking of tech stocks, this is another one that we kind of got right, but kind of got wrong. So I wanted to just put it in the category of we kind of got this one wrong, and that is Apple. We knew that it was going to run into Tuesday's event, but we thought that there was going to be enough catalysts in there to kind of keep this going. And so it ran all the way up from $110 last week to $118, $119 a share, and then ended up selling off pretty sharply after the event and continued to come down. And obviously it's really been beaten down today too, along with the rest of NASDAQ in the tech sector. This to me though, we talked about this on Stockwatch Sunday too, that Apple is just something that you just buy up. This is silly. This is kind of getting into an area where Apple's almost a joke not to buy it.
Yeah. Well, here's what we also said, and we did get this right. We mentioned that people wanted to hear iPhone news, and we got it right that they weren't going to say anything, and they didn't.
Yeah.
And so where I'll take the blame, and this is largely my fault, I got excited personally, but in retrospect, we should have known that everybody knew the watch was coming.
Yeah.
They didn't blow anybody away. We didn't expect to be blown away like with new stuff. I think I just got excited because I was blown away. It is a great product, but it's always been a great product. And so for the stock to move, I thought it was already beat down a little bit, but yeah, this is ridiculous levels. And I just want to put this in perspective. I pulled up. So right before the March crash happened, Apple had a dip the month prior. And so it wasn't like, it was like 88 in January, February, but then it went down, and then the crash happened March 1st. So at that point, from March 1st to the bottom, it was a 25% drop, nearly 26% drop of the stock.
Yeah.
Since its top, it's now 22% down from the high we just had.
Yep.
So to me, I hate to say it, but you got to get it. You got to continue to scoop it up. It's going to come back.
Yep.
Apple doesn't fall down this low.
Yeah, I agree. And I think that this is getting to a point to where it's just oversold is an understatement. And I scooped up a couple of other tech stocks today as well. But Apple was definitely one that I ended up adding to too. And may end up adding to if this continues to get beat down. Anything below $100, I'm going to just try loading the boat up on Apple because I think it'll just be 100% worth it. And I can sit there and just watch it. I don't even care. So, well, there you have it. There is where I was right, where I was wrong. If you guys were wondering where this came from, we pulled these stocks from Stock Watch Sunday, which we do every Sunday at 8:30 p.m. Eastern time. We go live and talk about the stocks that we're going to be watching for the week coming up. So would love to see you guys there.
Yeah, and don't forget to like and subscribe. And if you want to get Brad's daily watch list every Monday through Friday, next to the subscribe button is join. You'll be a part of the Chaos crew.
All right. See you guys there for Sunday.